Hi there and welcome back to Market Overtime right here on Schwab Network. I'm Sam Vadas. It is our pleasure to be joined today at the New York Stock Exchange by a very special guest, one of the most recognizable faces here on Wall Street and influential voices in financial media, and the author of an instant New York Times best-selling novel, How to Make Money in Any Market, the one and only Jim Cramer. Welcome to the Schwab Network, Jim.
Sam, I feel flattered and I thank you, and I support what your company's done for years. They've been probably my biggest backer, and I'm thrilled to be on your show. I think that you guys do a terrific job, and I know I came up to you. I usually was hoping, I just said, listen, I want to be interviewed by you guys because you do it right.
And I have to apologize because in my endeavor to imbibe every chapter of this book, I've completely defaced it. There is highlighter, there's dog ears, there's post-it notes. I've sort of cleaned it up for the purpose of this interview.
It is for the people who are watching.
But also,
it is written for these people, not for the hedge funds, not for the people who are saying, look, you can know nothing about the market and do good, but not for the speculators. It's for your people who want to save and hopefully get enough money to be able to retire or even to get rich. That's why it's such a special relationship I know that I have with you, your CEO, and your previous CEO, because you get it and I get it.
Right, and your producers let me in on a secret that you also deface other people's books. So,
constantly.
So I don't feel as bad now, but let's get started. I mean, you've been asked this question many times. You've written a lot of books, but it took you around 10 or 12 years to write this one. Why now?
Okay, a couple of reasons. Well, first of all, I will tell you, I was revolted by the process in the last time I went around because I'm a perfectionist, and the industry had gotten very imperfect. In the previous imprint I had, it was such a hard time to deal with them. They didn't seem to care. I'm just mentioning this is granular, and I'm not going to mention the name, but I just said the process of a book isn't as good as doing the show. Over the years, I realized that I'm in a linear TV program. It's being watched by a small amount of people, particularly each year fewer and older. And I just feel like I've got to reach more people. And the best way to do it and to not be, let's say, a periphery about it, is to just dig right in. And this book puts me back in the firmament that I felt I used to be in when I started TheStreet.com and first went on CNBC. It's the best way to reach people. And I wanted to reach people to get them to invest responsibly, but also so that they can change their lives. This is about changing your life. And I think that the possibility of changing your life has not dawned on a lot of people, but it's there. And I dictate how you can do it.
It's interesting. I read another book recently by Sarah Williamson, also ex-Goldman, and she wrote a book about the CEO's Guide to the Investment Galaxy, and she talks about financial media, and also she mentions you specifically about really how you're really personal friends of investors on TV.
Well, this is like, look, okay, so when we started, and I know I'm free-form here, but that's okay, Sim. I want to be free-form. When we started, I said to the network, I want to talk to individual investors. I want them to call in and talk to real people. And they said, never, no. And I said, no, you understand. We just talk to rich people. We talk to CEOs. We talk to analysts. Someone has to talk to the bus driver and the teacher, and the salesman. My mom worked in a gift shop. My dad sold bags. Someone has to speak to my mom and dad, which is what I do in the book, as you know. And I was laughed out of the room. But then my contract was almost over. And I was going to go away because I only wanted to talk to individuals. The new CEO came in, and not only did he think it was great, but it's Jeff Zucker. He said, listen, I want you to talk to individuals as much as you can. Maybe talk to 20, 25 individuals a show. And so now I've been able to speak to 100,000 individuals, and that's who we work for. When people ask me who my boss is, I always say, it's a viewer. The viewer is in charge, and I do what the viewer wants, which is to help them make a lot of money. Get rich, maybe. It's okay.
You do talk a lot about your parents in the book, but you also talk about the fact that you went to the library. So why another investment book? Why can't people just go to ChatGPT or Grok for their financial advice?
I think it's a great question because I started out by talking about how I used to go to the Mercantile Library in New York, and they had like months-old research, and it was really worthless, but I kept trying and trying. ChatGPT, I have a personal relationship with ChatGPT. It knows who I am. I know that sounds silly, but it knows I'm Mad Money, and it always is trying to give me 10 questions to ask. They're the worst questions. They are generic. They create very little illumination to the situation. And that's what I feel that ChatGPT does. It's good. Let's say you want to find out what Twilio does or what Astera Labs does. It's ideal because you put it in. The prompt is, please tell me what they do. What's the most important verticals? How's their balance sheet? Yeah. Those are things that it's really, really helpful to get started because sometimes the websites are impenetrable. But don't ask it to have any information beyond the basics because all it has are the public documents, and it can be skewed by, I happen to like Reddit very much, skewed by someone who's pushing it on Reddit, skewed by people who don't like it. So it's worthless other than the fact there's a way to be able to get at the actual documents and what's been said about it. Other than that, there's no insight, and people need to know that, no insight. But what a great place to start.
Yeah, and look, you mentioned balance sheets. You dedicate 15 pages to actually be able to read one, and then 12 pages on how to listen to a conference call. Why?
All right, Sam. When I started, I was talking to my wife, Lisa. And I said, I'm going to do the impossible. I'm going to talk about how to make money in any market, including how to pick stocks in a market. But to do that and to have any rigor, I have to teach people how to read a balance sheet, how to read an income statement, how to listen to a conference call. And she said, those will be 50 of the most boring pages ever. I said, well, I have to make them come alive, and I have to make it so that anyone who's going to do it his or herself has the ability and the grounding. And she said, well, I don't know if anyone's going to read that. And I said, I think it's irresponsible for me not to teach about how to read a balance sheet. I went over these pages for a whole summer, literally from June, July, August, and then I gave them to Jeff Marks and Ben Stoto, who work with me on Mad Money and my CNBC Investing Club, and we looked at them again, and then I brought an editor in to make them more interesting, and I brought an accountant in who's really great, big top accountant, and they're not, those pages, the conference call pages are interesting. No matter what I did, I couldn't make the balance sheet more interesting, but I did say to people, look, this is what I'd like you to know, but it's not, there's no test. But Sam, I really, and some of this is a little bit soul searching, but I did not think that I should write a book about how to make money in a market without teaching people, and even the toughest stuff. And I think that that's the toughest stuff. I took a couple years of accounting, but I still felt challenged. Long way of saying I could not do this book and feel like I really did a good job for people unless I gave them that insight if they wanted it.
Let's talk about one of those things that I know that you've talked a lot about, and that is indexing.
Yes.
I've spoken to a lot of investors more recently, Lawrence or Larry McDonald, who used to be a CNBC contributor, and, talking about how they believe that this is the way to go instead of individual stocks. I mean, you've had a lot of those touting it. I mean, your John Cochrane's, the George Soros, Warren Buffett's of the world.
You should have bought his stock rather than an index fund.
That's right. I've heard you say that before. It's interesting that you say in the book, and I'm just going to quote your line, if you don't own stocks, I believe that the combination of inflation and living a long life could spell economic catastrophe for you and your family.
Absolutely. I think that I want people to not die at their desk. I want people to be able to have enough money and save enough money. And there are dozens of examples that I put in the book, and I did it in a kind of a sub-rosa way, of stocks that are up thousands of percent, that all of which were totally gettable. Yep. Here's where I differ from the McDonald's of the world, the Buffetts. They are doctrinaire. They say that you can't figure it out, so you should just own an index fund. I say, and never stock. I say, why can't you have a compromise? Why can't you put 50% of your money in an index fund and then 50% of your money in a stock portfolio? They just simply do not believe that that's possible, that you could pick good stocks. I come back and say, well, wait a second. I mean, did you not know Facebook Meta? Did your kids not know Alphabet Google? Did you not buy an Apple? I mean, let's be serious here. These stocks were gettable and accessible, but because you were told that you could only own an index fund, you were not able to get these stocks, and so therefore you were not able to get rich in NVIDIA, and that's a shame.
What holds people back the most? I mean, we talk a lot about fear and emotion in these markets, but you really hammer home in this book the whole meaning of trust in these markets. I
believe in the actual institution. I first walked down the street, and I'm pointing to Broad Street, in 1982, and the Dow was flirting with going over 1,000. And everyone told me it's catastrophic. Don't you dare get it. It's just up from 700. It's way overextended. And I took the opposite view. I said, I trust America and I trust these markets. At 47,000, we still have these people who say, Sam, they say, hey, listen, it's too dangerous. These people have fought me the whole way. But I'm laughing to the bank. I don't know what they're doing.
In this market today, I mean, we continue to see record after record right now. I mean, have investors already made their money in this market in 2025?
I am concerned that you're coming in at a level where it may not be the best, but then again, you get Liberation Day, where the market fell apart. And I was sitting right there at my desk and saying, finally, I'm getting my prices. So their individual stocks give you individual prices. Now, I know I want to be a little more timeless and just saying, listen, it's time to buy Boeing, which I think it is, by the way. But there are always bargains. I mean, even though the averages are up really big, there's tons of stocks in the S&P equal weighted that are at their low, and you have to pick among them. Maybe some of them should be at the low, but I think that there's a lot of opportunity here at all time, provided you trust the market, provided you constantly put in. I mean, in my estimation, what I used to do in the back of my car was put money in an index fund, or actually I put money in the Magellan fund. That was the predecessor to that, and then pick stocks. And given the fact that there are things, people have curiosity, and people have powers of observation. Well, if you observe these things and you have curiosity, you can look them up now. You can start with ChatGPT or Perplexity or Grok, and then you can go look at these things and find out how their balance sheets are and how they're doing. And I don't know why people, the whole index thing is pre-ChatGPT. Now, like I said, I don't want you to let it choose you. Some people have said, hey, listen, you can choose stocks. I want it to be able to make it easier for you to find out what Emera does, okay? Just, Emera's a hard stock to understand, but what it does. And you'll see people all the time on air, and they'll say things about some company, and you might want to know about it. Sounds interesting to you. Well, then you can go ChatGPT and say, oh, it is interesting, and here's the bones of it. Now let me go to work. I was reading Andrew Sorkin's book, my compadre, and what's interesting is that he talks about there's a guy who's known as who wrote this book. Well, it's written about him, reminiscent of a stock operator, and he was possessed by the Livermore. He was possessed by the tape. And I came here when I was a little boy, and my mom and dad got me the tape that was like it used to come up. And I am still mesmerized. A lot of times when I'm on the show, I have the tape underneath, the crawl we call it, and I'll be like, wow, what's going on with Abbott? I mean, that's down big. What's AbbVie? Oh, it's the drug stocks are for sale. Okay, let me see what's the most dangerous drug stock. Well, maybe it's time to be able to get out of Vertex. Maybe this is the chance to buy Eli Lilly. That's this. I can't ask people to have that, but I can have people say, oh, I like that Eli Lilly. Let me look into that. A lot of people are using that drug. Let me see what it looks like, and then you do the work. And again, there's nothing guaranteed. I say point blank, you need to have the index funds because you may pick clunkers. But I need people to try to get rich because we're in an inflationary situation. We know that with the Federal Reserve, they're accepting 3%. We know that we have $37 trillion in debt. What, are we just going to rely on an index fund? That's irresponsible. The people who say that just index funds, they are the ones who are irresponsible, Sam, not me.
Okay. Let's talk about 12 years ago, FANG, and obviously that being Facebook, Amazon having
better
a great
be lucky
day.
Than good sometimes.
Netflix and Google, of course, along with Bob Lang, who is a very good friend of our network here at the Schwab Network.
Oh, fantastic.
What have you learned from FANG?
FANG was the most accessible situation in the world. Netflix. I mean, come on. Yeah, Netflix was the greatest bargain ever, other than Amazon. Incredible. Facebook, I mean, look, the problem with Facebook was how do I get my kids off it, right? And Google, well, they outlawed Google at the school where my kids were because it wasn't fair. So you look at those and you say, well, are they, other than Apple, the most prevalent things in our lives? So why not own the stocks? And the answer is, you're right, why not own them? See, I think, Sam, we got to change the equation. We have a lot of viewers here, and they're thinking to themselves, you know what? I have a power of observation. When I go to the supermarket, I see people who they want to own soda, and when they buy soda, they buy Coca-Cola. Oh, well, look at that. Balance sheet's great. Warren Buffett owns it. It's got a really good dividend. They've done really well in this period of inflation. I want to own the stock. Well, what's the matter with that? What's the matter with that? And the answer is nothing. But if you say that there is something the matter, what you're saying is the average viewer isn't smart enough to analyze a stock, and that's unfair. It's gratuitous, and it denigrates the average person. That's not the way I think.
And without giving too much away in this book, Jim, I mean, how does one approach finding the next FANG in this market?
How do I get in this, being bigger?
Finding the next FANG.
Okay, so it's really hard. But I did give 10 examples of what I think can be. Mm-hmm. And so far, I mean, I tried to pick stocks. As I said I said in the epilogue, I said, look, I hate that I gave stocks because I want people to understand. But I also know people are always saying, Jim, what would be out 5 years the next? And I give a bunch, and I thank you for saying not give them away, but let's just use the case of Reddit, okay, mm-hmm. which is now up 100 when I wrote it. Mm-hmm. But Reddit is a company that's they have the third largest viewed website in the country. I don't know how much time you spend on it, but I go to Reddit because of what happened with GameStop. That was done Wall Street Bets. But, my daughter, who unfortunately had melanoma, but and she's won. But when she got it, she was alone. And she didn't know what to do. I mean, alone mentally, okay, because we were all supportive of it. But then there's this site called the Melanomies on Reddit. And that's how I found out the deep nature of the audience and how much there's community and how much people are helping each other. And then, look, obviously, if you're an advertiser, you want a qualified group, it's going to be Reddit. And Reddit's just keep growing by leaps and bounds. And they have this great data, and all the perplexities of the world are going to have to pay them money. And so I'm thinking 5 years out, Reddit's going to be a winner. It's a good example of the ones I'm talking about. And,
we talk a lot about bubbles lately. I just want to get your thoughts on whether we are indeed in an AI bubble, given that you lived through .com.
No, and I'll tell you why. When I started the street, we had no money, and mm-hmm. Chase gave us a lot of money, and we went through a lot of money very quickly. There was very little discipline because what we were trying to do was get as many eyeballs to win the real estate of journalism. And there was a lot of irresponsibility, and a lot of the big bets were on fiber. Because there was supposed to be not enough fiber. You could say, well, that's the same thing that's happening here, but those companies all borrowed money. In the case of the companies here, with the exception of OpenAI, which is the one I'm most worried about, these are really well-established, great companies using their own cash flow. Mm-hmm. I think, as I said to my colleagues, David Faber and Carl Quintanilla, maybe we have to think about everything differently. Maybe we're being too small. Maybe Jensen Huang's right when he says, listen, these are trillion-dollar expenditures because the world is changing. And you don't want to be left behind, and these companies don't want to be left behind. I think that they're right. I think that the spend is right. I think they have to defend their turf from OpenAI. I think they're going to be able to do wonderful things with it, and it's just the cost of admission. I obviously wish it didn't cost that much money to build a data center. I wish it didn't cost that much money to buy something NVIDIA. But that's until someone else comes up with something better. That's what you have to do.
Right. I know you want to talk about the ascent of the individual investor.
Yes, very much so.
You've gone from working at Goldman with the institutional money, right. Obviously, to now one of the most influential voices amongst the retail crowd. What we've seen over the summer, something I noticed as far as those volumes, was really the retail euphoria and sort of this FOMO from the institutional guys. I mean, there seems to be a shift in how the pros are actually viewing the so-called dumb money in the market right now.
Believe me, they think it's the most stupid money on earth. It doesn't have algos, and it's not just all one great buy this, sell that nonsense. It's people who have two eyes and a brain, and they can see something, and they now can look it up. They can find out whether they like it. They can analyze how, in a simple way at least, the company's got any money or not. And make judgments. They see this and they say, okay, I think that I can buy the stock of this. Why? Because I can't live without it. Mm-hmm. And they go look at Apple's balance sheet and they say, wow, it's good. And the professionals are very contemptuous of the person who does that. But they're very, very right, the people who do it. Because there has been a long history of individuals making money in stocks. Mm-hmm. It's just been obliterated by journalists who have been involved with a complex of people who say, you know what, you can't make any money, you don't know what you're doing. And these are people, by the way, who I think are determined to prove that you don't have any ability to analyze things. And I find it reprehensible that they're like, I really do. I mean, I think that the company you work for and I share a particular ethos, which is that you can own mutual funds, you can own index funds, but you know what? Maybe you know more than people think. And I think that my mother knew more than people think. My father needed the book. My mother was able to, had eyes and she could see things. She didn't necessarily pick the right stuff because she didn't have the background. But we have to get away from thinking that people are fools and that the only people who can make money are the people who went to Stanford. I'm not buying into that at all.
Mm-hmm. You mentioned the Reddit. We know the Reddit crowd, obviously.
Yes.
You mentioned GameStop as well. I'm just wondering, what you sort of make of the whole phenomenon right now. I mean, of trying to make money in an unconventional way, as you point out in the book. I mean, we've seen over the summer, which GameStop didn't take part in, but this sort of revival of that meme craze.
Well, what I
Krispy
talked about,
Kremes,
I'm sorry to interrupt.
No, go ahead. How should we be thinking about this?
Okay, well, let's talk about Palantir. Okay, so
Yep.
Palantir is the modern day GameStop in the sense that individuals are in it and in it in a big way. And Alex Carr, the CEO, has really encouraged that. I look at Palantir in the book and I say, I was going to use Celsius, by the way. I was going to use both. Palantir was at 50 when I wrote the book. It's 200. It moves pretty fast. But Palantir is a very lucrative company. And when you speak to their customers, as I have the clients, they continually say over and over again, these guys are real. I spent a lot of time analyzing Palantir. Alex is not someone I have a relationship with, but I have a relationship with other people at the company. It's for real. And I think that it's the opposite of GameStop. But GameStop was a company that, frankly, it doesn't really have a lot of reason for being because we can download most of the stuff. They sell some other stuff, but it doesn't have any growth. Palantir's got the most exciting growth I've ever seen in a company. And a lot of that is because everybody who brings them in immediately would tell you that they start saving money and have a better trajectory to grow. One of the reasons I like the stock of Boeing is that their decision to bring in Palantir to try to help them make more money is going to make it work. Now, they're not miracle workers and it's not alchemy either, but I mention it because individuals are fascinated by it, and I wanted to describe to people why that fascination is not bad. Now, the reason I say at the beginning of the book that it's the most radical treatise you're ever going to read is everything I've said flies in the face of everything I read. But to denigrate the people who buy stocks at your company and the people who watch my show is the height of arrogance. The people who I had when I had Jensen Huang in with the Millionaires Club that we had of NVIDIA, people who made millions of dollars because they bought it and held it, I defy people to say that those people don't know what they're doing. If they had been in index funds, great, they'd make 8%. These are people whose lives were changed. I stopped outside of Barnes & Noble, and a policeman pulls me over, just come over here, and I'm like, oh, what did I do? I mean, I thought I was away with that. I thought I was finished with that stage of my life. And he says to me, look, Jim, I made $1 million. I watched you, and I bought NVIDIA, and you said own it, don't trade it. I said, why'd you buy it? He said, well, candidly, you kept talking about it, but when you named your dog NVIDIA, I decided to buy it. Okay, so now let's analyze that. It's obviously fanciful. But why did I do that? I did it because I'd spent a lot of time with Jensen, and I couldn't get across to people how important this company was. And I needed to get people involved with it because I saw it. Now, am I a Pied Piper? Am I Elmer Gantry, a great play from when I was growing up? No, what I was doing was saying, okay, I know it's hard to understand. NVIDIA is difficult. But let me tell you why I named my dog it. And then I talked about the things I saw. And people listened and they said, oh my God, if that's real, if you can really talk to a machine and it can do these things, well, maybe the world's about to change. And it has.
I want to talk about other insurance hedges that you talk about in the book because we're running out of time. I know you're a busy man as well.
I just love talking to you because the people who are watching are the people that I work for.
Gold.
Okay, I've been a gold bug for 4 years. I own gold. My wife buys Costco gold.
I know.
It was a great buy when it started. I don't know about now, but I think gold is a natural reaction to the trade deficit, to our budget deficit. I can't live with myself unless I have a hedge because of what's going on, and an inflationary hedge, and gold works for that.
I'm just wondering where you keep all these bars. I know that you're a gardener, so I'm wondering you're sort of digging a hole in the backyard or something.
No.
I'm giving too much away.
Put it in the bank.
Okay. And you say, ETFs to get some exposure, but you also say keep some 5 to 10% in the portfolio as well.
Yes. Yeah. I just think there are many ways to invest in gold. You can buy miners.
Yep.
There's funds for ETF for miners, both senior and junior. I think that just owning gold mine stock, I can't own individual stocks, but a mutual fund that has gold is good. I just want gold exposure. GLD is good. I never anticipated gold would have this rally, but I think it's an insurance that you happen to have made a lot of money on, but you can't cash it in because you need the insurance.
You didn't think it would go this high, this fast?
No, I did not this fast.
Right.
Because the emphasis had been on Bitcoin.
Yes.
Which I like.
Yes, you do.
Again, I like it as a hedge because I am thinking about my kids, 35 and a 31-year-old, who might get stuck with this bill of the government. And I don't see anybody in the government being tough enough to address it yet. I hope it does happen. But in the interim, if we get into a situation like a Zimbabwe, heaven forbid, or Weimar, oh my God, or Argentina, I want my kids to be ready.
I want to get just a little bit more personal, Jim, and sort of talk about what the maddest piece of financial advice you've ever got from somebody else is.
What, the worst?
The maddest.
The maddest? You mean like anger?
Like just mad. Could be anything.
Crazy.
It could be angry. It could be crazy. I mean, you run mad money.
Sure. I'd say the craziest stuff I have was stocks that were really low price, which seems so attractive because they're so low price. And I did buy them and very aggressively, and I did lose everything. But they were $2 stocks. And I figured, what's the matter with $2 stock? I mean, it can go to 4, it can go to 5, but it went to 0. And I've had 2 of them go to 0. And I've had only one of them go up big, and fortunately it made up for the ones went to 0. But please remember, you can lose everything with a $2 stock. Don't feel like, it's how much can you lose? Lose everything. It's bad.
I know it's a bit cliche, but if you had to start from scratch, would you do anything differently?
Me? Oh God, are you kidding? Oh my God,
I love the honesty.
I'm a train wreck. That's what I told my wife when I met her. I said, listen, you understand, I'm a train wreck. Yeah, I would do many things differently, but the first I would do would be a recognition that work isn't as important as you think. I think that what's happened to me, I don't want to have to other people. My desire to be successful was legally successful, of course, was insane. And you don't want to be like me. I was and remain too driven, but that was because it was drilled into my head that there were other people who were smarter and better and harder working and would make more money than I did. That was the ethos that I'm from. I regret that I bought in, but I did, and I think that there's so much more to life than what I saw. And it also drove me to extremes in a lot of different ways that made it so I was, if you read Confessions of a Street Addict, a truly horrible person. And I'm glad I've lived long enough to not be that person anymore. But that was a person who listened and said, okay, it's imperative that I get rich. And it took a lot out of me to be who I was. And it destroyed a lot of things. And, look, I say it in Confessions, it's not like I'm never talked about it, but I'm not, and I wasn't reprehensible. I never did anything that I think you would say was racist or sexist, none of that. But I gave up my life to getting rich. And there's a lot of people who do what I do. There's very few people who admit it.
Well, we're very thankful for your drive and also your honesty and the sacrifice that you made. Because I heard Josh Brown say the other day, you are the greatest communicator about stocks in his life that he has ever seen. And, you brought us this book and you teach us a lot, Jim. So thank you so much.
Thank you, Sam. I will tell you that I was very honored by Josh, but I'm just as honored to speak to you.
Thank you so much. Jim Cramer there. You can find his new book, How to Make money in any market available now. And that's it for Market Overtime here. Be sure to like and subscribe to the Schwab Network on YouTube and across our social media platforms. I'm Sam Vadas. We'll see you again soon.